The momentum indicator is a popular technical analysis tool used to measure the speed or strength of price movements in financial markets. It helps traders determine whether an asset is gaining or losing momentum, which can signal potential trend reversals or continuations. This indicator is typically calculated by comparing the current closing price of an asset to its closing price from a specific number of periods ago, often represented as a simple formula. Momentum chak current price. Price n periods ago. The resulting value fluctuates around a zero line, where positive momentum suggests that prices are rising and negative momentum indicates a decline. One of the key advantages of the momentum indicator is its ability to identify early signals of trend strength before price movements become fully evident. When momentum rises sharply, it indicates strong buying pressure, while a rapid decline signals increasing selling pressure. Traders often use momentum alongside other indicators, such as the Relative Strength Index, RSI, or Moving Average Convergence Divergence, MACD, to confirm trading signals and reduce the risk of false breakouts. A common strategy involves looking for momentum divergences, where price action and the indicator move in opposite directions, suggesting a potential trend reversal. For example, if an asset reaches a new high, but the momentum indicator forms a lower high, it may indicate weakening bullish strength and a potential downward reversal. Similarly, if price makes a new low while momentum creates a higher low, it signals potential upward movement. Momentum can also be used to confirm breakout trades, as a surge in momentum often accompanies significant price breakouts, adding confidence to entry decisions. However, like all indicators, momentum has its limitations. It can generate false signals, especially in choppy or ranging markets where price movements lack clear direction. Additionally, momentum does not provide absolute price levels for entry or exit. Instead, it serves as a supporting tool that requires validation from other technical indicators or fundamental analysis. To enhance accuracy, traders often combine momentum with moving averages, such as the 50-day or 200-day moving average, to align their trades with the broader trend. The momentum indicator is widely used across different asset classes, including stocks, Forex, commodities, and binary options, making it a versatile tool for traders of all experience levels. By understanding and applying momentum effectively, traders can improve their market timing, spot high-probability trade setups, and optimize their risk management strategies. Whether used for short-term scalping or long-term trend trading, the momentum indicator remains a valuable component of any trader's technical analysis toolkit. For more insights into momentum trading strategies, visit my Facebook page, Binary Options Strategy.